Hello everyone. Today I am reviewing SBI Cards and Payments, which is coming up with its IPO soon. SBI Cards is a credit card division of SBI Bank. It was set up as an NBFC with GE as partner. It was a 60-40 joint venture between them, and later GE sold stakes to SBI and Carlyle Capital. So currently it's a 74-26 JV between SBI and CA Rovers, which is Carlyle Capital subsidiary, and it is the second largest player in the credit card market in India. It has 18% share in total cards outstanding and in total spends, which are the two key parameters for the card divisions. For the IPO, the Carlyle is expected to sell 10% and SBI will sell 4%, and there will be an new issue of 500 crores. And all these transactions will be done with the valuation of 58 to 68,000 crores. And for the cards, the card companies, there are three components of revenues: the interest income, non-interest income, and other income. The interest incomes is what, like, someone uses cards to buy something and misses to pay the bill or makes a part payment. The company charges the interest, and that comes under interest income. The companies give loans, personal loans, or they give options to convert to EMIs, then that's calculated as term loans or EMIs. So for SBI, 51% of income is revolving credits and term loans, and 44% income come from non-interest income, which includes spend income. Spend income is when you spend credit card for transaction. The company gets a certain portion of the transaction as a fee, and which comes under the spend income. And the company also has a fee income component, which includes the late fees, cash withdrawal fees, and all other types of fees. And there is a subscription fee, and you subscribe for card, they charges an annual fee, then you upgrade, the fee increases. So these all comes under the non-interest income, which is 44% for SBI, and the remaining is other income, which includes the service charges, various service charges, business development charges, and other incomes like the interest earned for FDs and other things. The company has seen a very fast growth in the past 3 years. The interest income has grown in last 3 years from 17 to 19. The interest income has grown at a 53% CAGR, and interest from fees and services, which is the non-interest income, grew 38%. And even the other income has grown very high fast, and the total income has grown at 45%, and even the profits has grown at 52%. So the company is growing at very, very fast. I will come with the market share gain in coming slides. So right now we will check the key parameters. So for the total loan book outstanding, 60% is revolver or transactors, which means we use the card, and if we pay the dues on time, then the person will be categorized as transactor. The company doesn't earn any interest income from that person. The revolver is someone who revolve the due. When you make the part payment, when we miss it, the company charges interest for that. And the 30% is the term loan or EMIs, the people who convert the credit card loans to EMIs. And for the entire loan book, the average yield is 21 to 22%. And NIMS, that is the net interest margin, the margin is 15 to 16%. And the gross NPA is, for the last 3 years, it varied between 2.34 to 2.81, and net NPA after all provisioning and write-backs, then net NPA is 0.76 to 0.94, and ROE is pretty good with 4 plus on all the 3 years, and ROE varied from 28 to 31%. So this chart shows the market share in the total credit card spent, and if you see here, the market leader is HDFC Bank, while the HDFC Bank is losing the market share. The SBI has grown the market share very rapidly from 11% in 14 to 18%. And next is market share in terms of total outstanding credit cards. So here also the HDFC is the market leader, and it's flat market share, whereas the SBI has grown very fast from 15% market share to 18%. So SBI Cards is the fastest among the credit card companies in India, and it's expected to grow very fast. So this is the breakup of unsecured credit market, which includes the credit card, personal loan, and consumer durable loans, like the loans which you get it from Bajaj Finance. So the largest in the category is personal loans with 73%, and credit card with 22%, and the consumer durables is the smallest, and it's dominated by the NBFCs like Bajaj Finance. And when you look at the key growth drivers for the company, the main part will come from the underpenetrated credit market. So India is deeply underpenetrated for the credit cards, and it is expected to grow very fast in coming years. If you see the card penetrations, it's just under 3% penetration. In US, it's over 300%. It's a lot of opportunity for growth. And other than the penetration, the other opportunity comes from the increase in spends. So as per the RBI and CRISIL estimates, the credit card transactions are expected to grow 2.5 times in next 5 years. And there is an opportunity for growth in the dues, and even this is expected to get a very fast growth. It has grown at 28% in last 5 years, and it may see some small slowdown, but it's still expected to grow over 23% in next 5 years. Thank you.